I'm Lloyd Holiday, and this is the Cost of a Thing podcast. Thanks for listening in today. So what was it like to live during the 1960s, and what happened to that great standard of living that we had back then? That's what this podcast is all about, and that's what I'm going to be talking about here on the Cost of a Thing podcast. Okay, I see I'm going to do a Lloyd Holiday quick ski today. I'm going to try to keep this very short, and just a couple of thoughts about the big stock market drop. Looks like 7,000 points or so, and I'm going to call them 7,000 fake Fed points have dropped off the Dow Jones index, stock index value. So those 7,000 fake Fed points that came from nowhere for doing nothing have evaporated back to where they came from. That's my opinion. And the Fed should have listened to reason, and there's a lot of people out there with a lot of knowledge that have talked about this. I've talked about it many times that the stock market was 5 to 6 times its real value, and now it's down to about 3.5 times its real value after this. But they should have listened to these smart people out there. I'd mentioned David Stockman, guys like Peter Schiff that have been talking about this, some of them for 25 years or more, and saying that the stock market's overpriced and the Fed is manipulating asset prices higher with their interest rates and all that. So the Fed should have listened, but they didn't. But here's the problem with that. If the Fed would have listened to David Stockman and the others, and there's lots of people who said that these stock values have been overpriced for many, many years, since the 90s. If they did, their owners, the Federal Reserve's owners, which is Wall Street, the bankers on Wall Street really own the Federal Reserve. Those bankers, the owners of the Fed, if the Fed had stayed out of it and let asset prices be their real value, those bankers and Wall Street could not have gained the easy trillions of dollars in fake booty money that came from nowhere for doing absolutely nothing. They couldn't have got all those trillions in free dollars. They would have had to actually do some work to get money instead of just waiting for that free inflated asset money to flow to them for doing nothing. And all that free money that came from those inflated assets is all due to the Federal Reserve inflating those asset prices with their policies, their money printing and their QE and their zero interest rates for 10, 15 years. That's all due to them. Not real. These are not real values. They never have been. Like I said, they're 5x or 6x times their real value. That includes many real estate prices around the country too, in the big cities especially. What I mean is they're 5 times their real value or 6 times the real value. Like I said, now the stock market is back to about 3.5 times its real value, but they'll probably prop it back up somehow. I'm anticipating that the Fed will step in with even bigger QE or some other program where they're allowed to go in and actually buy stocks. This is going on in Europe and Japan right now, where the central bank is allowed to buy stock to drive the price higher, which is a complete joke. My solution, and some of these other people's solution, but I'm just going to talk for me, the only way that I see to get back to a real and a healthy economy is to let those asset prices fall to X. And by X, that is real value. And by real value, I mean real value of the stock markets and real estate prices, house prices that are based on real people's wages and their savings, and not on the Fed's printed phony money. And that's all I'm going to say about it today. I just wanted to get that out there. And I hope prices go back to X and we can go from there. And we will have a good economy. And we did in the past. We had real asset prices in the past, and we had great economies in the 60s and 70s that I always talk about. That was the best economies we ever had back in the 60s and 70s. Maybe even in the 50s. Those were real asset values, real house prices, real stock prices. What's wrong with real asset prices? Well, I just answered that earlier. They can't get, the bankers on Wall Street can't get all that free money for doing nothing that comes from nowhere if we have real asset prices. They have to really work to get money then. At that point, they don't want that. They want that free money. Those bankers and investors, they want that money as if the value of the stock market maybe would have been 30,000 in the year 2050 or 2060. Well, they knew they're not going to be here in 2050 and 2060, so they wanted to pull those values to now, to the present, so where they can spend that money now while they're still alive, and they don't care about the people in 2050 and 60 because they're not going to be here. Anyway, that's my spiel on the coronavirus drop in the stock market. I wouldn't be surprised, like I said, if the Fed and the Congress get in there and prop that stock market back up to 30,000, that Dow back up to 30,000, where it was. But it's not going to help in the long run because we need real asset prices. That's what created part of what created our great standard of living in the 60s and the 1970s. Thank you. Thank you for listening in today. And until next time, this is Lloyd Holiday signing off.